What's going on, you guys? My name is Zach Hartley and welcome back to my weekly watch list video. In this one, I've got 4 stocks that I want to share with you this week. We're also going to review the economic conditions affecting the market. So without any further ado, let's jump right in. Okay, so taking a look at the broad market in general, we're going to start with the NASDAQ, then the S&P 500, and then the Dow Jones. And as you can see, here was the high before COVID, right around this 10,000 mark. We dropped down to 6,600, brought back up to around this 11,000 mark, and pulled back down right here to 10,500. We then ran up over the next year and a half, and we are now pulling back down to that exact same 10,500 level. So we are just above the pre-pandemic levels on the NASDAQ, and we had an excellent week last week. Like Tuesday, Wednesday, Thursday, Friday were all green days. It was a great week. It looks like we're bouncing off this 10,500 level, and if this continues, there is a chance that this is the bottom of the dip. It's too early to determine that and too early to say that right now, but it does look like we had excellent momentum last week, especially in technology stocks. So that's sort of going to be a focus for this week. Now, when we look at the S&P 500, you can see again, it was an excellent last week, like 4 or 5 green days out of the entire week, and we are not quite approaching that pre-pandemic level right here around 3,400. We're currently at 3,900 right now and kind of trading in a bearish channel at the moment. So overall, we are definitely in a bearish trend right now in almost every industry. However, the last week definitely looked really good. This is what the Dow Jones looked like. As you can see, we did bounce off pre-pandemic levels. That's what we were testing at the beginning of this week. That was at 30,000. We are now currently trading at 31,500 points. So it was an excellent week for the Dow Jones, and it was a very clear bounce off of those pre-pandemic levels. I personally think that pre-pandemic high is going to be a very key level for all of our major indices as well as a couple of major stocks. So we're going to continue to talk about that over the next few weeks. When we look at Bitcoin, though, it has been an awful month for Bitcoin. We saw a massive drop from 30,000 down to 20,000, a fall of like 33% in just a matter of days here. Now it looks like we are slowly hovering around 20,000. We're currently at 21,000, almost 200. And over the last 4 or 5 days, we've been going in the right direction, but still we're down by 70 or 80% on the year. So it's not looking very good for Bitcoin in general. Hopefully this is the bottom, but again, way too early to tell and way too early to say that. With regards to earnings this week, we've got Nike coming out on Monday. We've got AeroVironment on Tuesday. On Wednesday, we've got Bed Bath & Beyond and a couple of others here. Constellation Brands comes out on Thursday. We also have Field Trip. This is a psychedelic stock that I've covered a couple of times on the channel. They actually come out Wednesday after the close. So a couple of companies, not a massive earnings week though. What I do want to talk about just before we get into those 4 stocks though is inflation. And I talked about US inflation last week. It was at 8.6%, I believe it was. And it's going in a pretty steady increase. And in Canada, we just got the numbers and it's the exact same thing. In May, it reached 7.7%, almost 8%, and this is the highest rate of inflation that we have seen in Canada since 1983. We're pretty much in line with the US with regards to the rate of inflation growth right now. We're about 1% lower than the US, but this is starting to become a major problem in both countries, and if it continues, it's going to put a lot of pressure on a lot of people. Now, to counter inflation, what the governments are doing is they are raising interest rates, and the industry that this is largely going to affect is the housing industry, and we can already see its effect starting to really have an impact. So this is existing home sales in the USA. So this is just basically number of homes that are getting sold pretty much on a monthly basis in the USA. And as we can see here was our kind of pre-pandemic level right around 5,500. It dropped during the pandemic. Obviously, nobody was buying a house when you didn't know what was happening and the grocery stores were empty and you didn't want to touch people. But as soon as the governments dropped the interest rate to 0, everybody wanted to buy a house because it was super cheap. And the number actually shot up above pre-pandemic levels of 5,500. Then they kind of kept the interest rates really low for a little while, and now at the beginning of 2022 here, they're dramatically increasing interest rates, and as you can see, that is having a massively negative effect on the number of homes that are being sold per month in the USA. I assume this chart looks very similar for Canada, and I just want to get the point across to you here that inflation is going up. So governments are raising interest rates to slow down the economy, and one of the areas where it's really going to hit consumers is in the housing industry. If you have to refinance your mortgage in the next few years, or if you're planning to buy a home in the next few years, this is going to have a major impact on you because interest rates to borrow money are going up right now. And the reason is because the Federal Reserve is raising interest rates. So if a bank wants to lend money to somebody, they lend it to me on a mortgage, there is some risk to that. But if they put it into the government and they can get a 1.5% return on their money, that is considered the risk-free return because it is the safest thing that you can possibly invest in. The only way it goes bad is if the entire US government collapses. It's theoretically the safest thing that you can invest into. And so if a bank is sitting there and saying, I've got millions and millions of dollars, I can put it away at 1.5% risk-free, or I can lend it to you, they're obviously going to charge you a higher interest rate. And that is why it is costing us more to borrow money, because the Federal Reserve is offering these banks a higher interest rate. And so to take on that risk, they have to charge a higher interest rate. And so that is what is happening. Now, how do you make money in this environment? That's what we want to talk about. That's what we want to focus on. So the answer here is that profitable companies will do the best in poor economic conditions. If you are a growth stock that is unprofitable, that is probably reliant on raising money to make it to the next year, you are going to struggle massively because it's going to be harder and harder to raise money and your valuation is going to be cut in half. The second thing here is that cash flow is going to become more and more important to investors. And what I mean by cash flow is I mean dividends and I mean interest from bonds. That is going to become more valuable to investors because they're going to be less sure that they can make money on growth stocks. And so the safer cash flow is going to become more desirable for a lot of investors. And you can also make money by shorting the industries that will not do well. There's a couple of companies and a couple of industries that are not going to do well if the economic environment is poor. Think about all of the luxury goods. Nobody's going to be spending money on luxury goods if we are in a recession and people are really struggling to manage inflation and the rest of their bills. So there's a couple of industries and a couple of companies that probably won't do well if the economic conditions get really tough. You can make a lot of money by shorting those stocks. You can buy put options in those stocks. You can buy inverse ETFs for the industry. There's lots of different ways to do it, and I've made several videos about how to do it on my channel. Now, let's dive into the stocks that I am watching, that I am buying, that I am into. I'm currently holding Amazon and I'm looking at adding to my position right now. The reason I like Amazon right now is because it's currently trading at pretty much the pandemic levels, which is absolutely fantastic considering they have doubled their supply chain since then. So I love Amazon as a stock right now based on the valuation and based on how the company is doing. We also have a very clear triple bottom right here at $100. You can see at the beginning of May we tested 100. We got all the way up to like 115 right here, came back down to 100 right here about halfway through May, and we just tested it again about halfway through June here. We are bouncing off it with the beautiful week that we had last week, and I personally am pretty close to adding to my Amazon position right now. The next stock I want to talk about here is Microsoft. Microsoft is a really important stock because they're one of the biggest tech companies. They have their hands in almost everything, and they are a very, very good company. They're growing, they're profitable, they have a great balance sheet, they have good management, they have a strategic advantage, and they've carved out their little niche in the technology market, and I love what they're doing. I also think the stock has very good support at $240. You can see we bounced off it right here in April of last year. We are bouncing off it again in June of this year. We are still in a bearish trend at the moment, so I am not buying into it. I don't have a position in Microsoft right now, but what I am watching for is a breakthrough of this trend line right here and a breakthrough right here of our 50-day moving average. If we can see both of those on Monday and Tuesday, it could be a great opportunity to get into Microsoft as long as the market continues to move higher. If the market sells off because of recession fears or inflation or the Fed, everything is going to drop, including Microsoft. But if we start to see a couple of really positive days, I think that this could be a great opportunity for an entry point in Microsoft. The next stock here is Alibaba. I currently hold a position in Alibaba. I'm finally making money on Alibaba. I was down for a few months in here, but I am back in the green on Alibaba, which is beautiful. I also posted that trade in my Discord chat if you want to check it out. The link is down below. But Alibaba, I like the company because China has a lot of catalysts right now. They have been absolutely hammered over the last few years with regards to COVID, especially recently with some of the lockdowns. And then on top of that, the Chinese government has really cracked down on a couple of key people as well as companies, one of them being Alibaba. But I think that we are at the end of that crackdown. And because of that, I now think Alibaba is trading at a very significant discount. They're a profitable company, They're growing quickly still, and I think that China is on the rise right now, and I don't think there's much that's going to slow them down. Elon Musk did an interview where he pretty much said the same thing. And if you're interested in learning more about this, Ray Dalio did one of the best videos that I have ever seen. It's called The Changing World Order, and if you don't know who Ray Dalio is, he's one of the best investors to ever walk the earth. His record is extremely impressive, one of the most profitable traders and investors in history, and he made a YouTube video that's animated and walks you through his entire theory about the changing world order. One of the best videos I've seen with regards to economics. You should definitely check it out. I will link it down below. Okay, now the fourth and final stock that I want to share with you is Palantir. Now this is not a profitable company, so quick disclaimer there. This is a company where if the market sells off, these guys are going to get hit. However, Palantir has a great software. They have a strategic advantage. They have great long-term sticky government contracts, and I like what they are doing. I also think the current global situation of governments trying to protect themselves really works well for Palantir right now. So I do think they have a couple of catalysts that are supporting them. The other reason I like them from a technical perspective is because the stock fell all the way down to $10 right here. It bounced back up to around $14 or $15 here, and then it came down to $10 and drastically fell through $10. So right off the bat, I'm like, okay, maybe $10 is a key level that we should be watching for. Fell down to $6.44, and then it came back up to $10, and it got rejected down to like $7.75, $7.80 here. And so that is the third time that $10 has played a key role. And now over the last week, with the great week that we had, we are breaking through this $10 level. And so if on Monday, Tuesday, this continues, I think this could be again a great entry point in Palantir. I would put a stop loss just below $10, and you can literally get in with probably like a $1 loss per share on this, and I think the risk to return ratio is just going to be absolutely fantastic. Now, if you're interested in using any of the charts that you saw in this video, I personally use Questrade to do all of my trading and investing, and there's a link down below that will give you $50 in free commissions. There's also a link down there that will give you $25 completely free with the Newton crypto trading platform. All you have to do is deposit 100. They will give you 25. It's literally a 25% ROI instantly. And if you're interested in getting started in real estate, Addy Invest, there's a link down below that will give you $25 to invest with them. Now, if you want to learn more about the stock market, how to look at charts like this, and how to actually analyze companies, definitely check out my stock market fundamentals course. You get the first month completely free. It's hosted on Skillshare. It's like the Netflix of coursework, and it is absolutely amazing. The course is 10 hours long. It has over 12,000 students that have gone through the course. It has over 400 reviews, and I think we're actually at 1.9 million minutes of watch time, which is absolutely insane. It's hosted on Skillshare. Like I said, completely free for the first month. If you can do the course in a weekend, it's only 10 hours long. You get the entire thing for free. Link is down below. Thank you so much for watching another weekly watch list video. I will see you guys in the next one. Good luck trading, good luck investing, and we'll talk to you soon.